to Around the Horn in Wholesale Distribution with Kevin Brown and Tom Burton. Sponsored each week by LeadSmart Technologies, Tom, Kevin, and their guests review the news of the week and dive deep into the topics impacting manufacturers, wholesale distribution, independent sales agents, and the global wholesale supply chain. Whether it's M&A, SaaS and cloud computing, B2B e-commerce, or supply chain issues, we peel back the onion with our guests into the topics that impact your business the most.
There we are.
Yeah.
We are. I love that you've got that going. And as I said a few weeks ago, Tom, when you started off with that, Nelson, you're on mute there, buddy. But Tom got this great new, I call it the Jim Cramer from CNBC. What do you call that? Studio soundboard. So
yeah.
You can bring these things in. But as fun as that is to hear the clapping or the booing or whatever he might do, my most enjoyment out of all of it comes is watching the grin on Tom's face when he does it. That's the.
All right. That will happen throughout the show. When I want Kevin to stop talking, I just throw that in there. It works great. So.
You know, my concern, Tom, is if you use the gong on me like that, my wife is going to hear this and ask you how to get that so she can just play that on her phone for me.
She can buy one and put it in the living room. She could just whap it.
Yeah, right. That's right. Nelson, we were at Tom was in town earlier this week, and good morning, Bob. Welcome to the show. We got some people starting to come in live here. Tom was in town earlier in the week, working out of our offices here in Orange County, California. And before he headed back out of town, we went to dinner with my wife. And when I get together with Tom, who I've known my whole life since kindergarten, and my wife that I've been married to for almost 22 years, guess who becomes the punching bag?
I can see that. Yeah.
Not proud. Yeah. So they have a field day with me. So
it's called low-hanging fruit. It's called low-hanging fruit.
Low-hanging fruit. Yeah.
So maybe a good present for Tom, it would be to buy a couple of sounds, bites or beats for him, right, Kevin, for Christmas. So when you guys go over the show, you can have a little bit of, variety, right, in terms of the sounds, depending on what you said and you don't say. And that way you guys can entertain a little bit more, right, yourselves.
Well, stand by. What else you got there, Tom?
I don't know.
Very good. Yep. All right. Three minutes in, and we're completely off the rails. So perfect. Well, welcome everyone that's joined us this morning. I'm Kevin Brown. I'm here with my lifelong friend and co-founder of our company and co-host of our show, Tom Burton, and we've got our good friend Nelson Valderrama from Intuilize, and we're very happy to have you with us today, Nelson. But for those of you that might have been under a rock in wholesale distribution and manufacturing for the last 3.5 years, Tom and I get together every Friday morning, come rain or shine, unless someone's on vacation, in the hospital, or on an airplane, and we've done the show from vacation, and we've done the show from airports before, but not from the hospital. So we're going to try and stay out of the hospital. We get together every week. We review the news of the week in the economy, the supply chain, mergers and acquisitions, sales, marketing, on and on and on. And from that standpoint, we review our newsletter, and we just jump right in and talk about how that relates to the week, the news of the week, and so forth as well. So that is the focus that we do here each week. And we've got with us this week, we have our good friend Nelson. Nelson, we're appreciative of you give me some feedback on exactly what you do and your background and your history company before we dive too much further.
Sure, definitely. No, Tom and Kevin, thank you for inviting me. And as I posted in LinkedIn, I wanted to congratulate you guys for the persistence and discipline of doing this, right? 82 times. I know that all of the entrepreneurs out there know how difficult or challenging it is to be disciplined about working on a channel and be able to be consistent about it. So congratulations for that, guys. And that you guys said, it's been a blessing for the industry, have you guys, and have fresh ideas in your conversation on that one. So thank you for that, and keep doing it. That's something that our industry will need more and more, especially coming from companies like us, which are relatively small, mid-sized. I know the bigger ones, they have plenty of money to burn. So, but us, right? It's a little bit of an effort out there. So thank you for putting all this together.
I appreciate that, because it's a labor of love versus the podcast is not a business. It's a labor of love. And we do this, try and do it every single week. We're off next week, but I think we typically don't miss more than 3, maybe 4 weeks a year. Is that we don't we get here. So we've got a team that works with us on this. We've got a person behind the scenes, Lily, that worked with you to prep you for the show, and we got John, our editor and producer, on the back end that handles everything. Which is actually kind of a nice little intro and feed into the next segment of this. Is that we publish a newsletter each week, and that newsletter is called Around the Horn in Wholesale Distribution and Manufacturing. If you don't get that newsletter, that's the newsletter that will be up on the screen today for those of you that are with us live or watching a recording of the live show. And you'll see that, again, it's called Around the Horn in Wholesale Distribution and Manufacturing. If you don't get that, we'd love to get it to you. You can reach out to us at hello@leadsmarttech.com. You can certainly jump on to LinkedIn. Just search Around the Horn in Wholesale Distribution. That'll pop up, or you can go to the LeadSmart Technologies page and left-hand column on LinkedIn. If you scroll down about halfway, you'll see a link to the newsletter, or you can go to the website for the podcast, which is www.aroundthehornpod.com. And you can see past episodes there. You can subscribe. You can do whatever you'd like to do in that setting. But we'd love to get that newsletter out to you. It goes out to well over 10,000 people each week. And we'd love to expand that and get that to you. For those of you that are listening on the recorded podcast on Apple, Spotify, wherever that may be, you won't be seeing these 3 handsome faces here. So you'll not be able to see that newsletter. So getting a look at that by getting it into your inbox or seeing it on LinkedIn would be a benefit for you as well. So before we dive into the news, we'll thank our sponsor, which we do each week. Tom and I work for a company called LeadSmart Technologies, and we've developed a platform that helps wholesale distributors and manufacturers accelerate growth within their business. We have an AI-powered solution that what we describe it as an enterprise growth platform, where we bring siloed data and fragmented data from across the business, which is one of the wonderful things about wholesale distribution and manufacturing is that there are treasure troves of data, but they're scattered and fragmented around the business and across the business. So we bring data in from ERP, marketing automation, spreadsheets, PDFs, sources that you might have in a data lake, your e-commerce solution. We bring all of that data into a single unified platform, and then we use the AI tools and the other business tools to look at that across your customer's journey. And what that does is it gives us deep insights into what's happening specifically at the customer, and it helps everyone in the business, from the sales and marketing team to customer support to purchasing and operations and executive leadership, because we can see when we're using each one of the systems and solutions that we've built in there, from Smart CRM, Smart Sales Enablement, we've got a whole marketing segment and Smart E-commerce solution, where now we're visualizing and evaluating across the business to make smart decisions. And you don't just have to log into the platform to get that. You can get those reminders and prompts of what we should be working on each day, what customers are buying, have stopped buying a product, what customers might have an issue with accounts payable. All of that comes right to your smartphone with digital alerts, just like it would from ESPN or your stock account or whatever it might be. So we love working with wholesale distributors and manufacturers both. And if we could be of help to you in your digital journey, we would love to have you join us on what we're doing in this setting. So before we dive into the first news article, Nelson, why don't you tell us briefly a little bit about Intuilize and the work that you do with your team?
Yeah, definitely. Thank you, Kevin. So a little bit about me. I have been working on the distribution industry for over 30 years. This will be my 30 years anniversary. I started back in 1996 working for GE. When GE used to be a great company to work for. Nowadays, it's a little bit different. I know I have plenty of friends that are still working on GE, but it's just a different company. I work in GE Supply back then. I was in a management program. I was one of the first non-U.S. citizens to participate in this leadership program. I was able to have rotations in a couple of cities in the U.S., be exposed to a lot of great things. Then I work in GE Capital when I learned about analytics, and I fall in love with analytics. So that's pretty much my stint on GE. Then in 2010, I moved to California, working for a private equity firm. I helped them out to buy a couple of companies in Texas and in California. Then we sold that platform to a bigger PE back in 2017. And in 2018, I put my money where my mouth was. So I said, AI and analytics is going to be the future of distribution. As you say, Kevin, all the data that I see across, all the different silos. So I started my own company, Intuilize. And what we do, we're a profit, improvement platform. That's what we are. So we are focusing on the two main levers that distributors have, which is pricing and inventory. And anyone that have been going through this process knows that 1% of gross margin increase, it's a big increase in your bottom line, right? So that's something that has been proven over and over from McKinsey, BCG, or anyone about the math and how to get there. And inventory, the same thing, right? I think a lot of distributors, their working capital, it's a challenging side for them. So having a 5 to 15% reduction in working capital, or what I said, right size your inventory, is going to help them out. Respectively, you are small and mid-sized. We love to work with the small and mid-sized distributors. That's what we love. That's what our customers, love to working with us on that one. And I think that's our strength, right, to help out those guys. So that's what we do. We have primarily service in the U.S. and Canada, and we're passionate about what we do, as you guys, are. So that's pretty much about the company, about what we
Great.
are. Yeah.
Good. Well, it's great to have you with us. We're looking forward to your insights. Tom, anything to add before we dive into the news?
Let's get on to the news.
We talk about the first segment that we go into each week is from the newsletter. It's the economy and supply chain section. So the Fed and global forecasters clash on 2026 inflation numbers. Who is right? This is an article from CNBC from just 2 days ago. Any thoughts to kick us off on that, Tom?
Well, who is right, I guess is the question. Seems like we have another opportunity for either some poly market or some betting here. I think the 4.2 is way high. I don't think that is, there were two things in there that I can't predict what's going to happen with the war and how long it's going to last and all these types of things. But I think it was, to me, that's an extreme uptick in the inflation, which really isn't inflation. It's really affordability, right? It's how do you actually end up, things are costing more along the way. But also they also forecast a very sharp drop in GDP as well over the course of the year. So compared to the Fed's 2.7%, everybody's crystal ball is equally cloudy, as Bob says, is the Fed is saying 2.7%. I would probably say around 3.2 by the end of the year, somewhere in that neighborhood. And I don't think GDP will drop anywhere near the level that they're talking about there. I don't know a lot about the OECD.
Let me share a few things about that I looked at in my preparation this morning. So the organization, so again, this article is from CNBC, the Organization for Economic Cooperation and Development. It's described as an international organization of 38 countries committed to democracy and the market economy. They sometimes, the research I did, they called it the Club of Developed Nations, acting as basically an economic and governmental think tank on their own. So they do tons and tons of work with data and analysis and then policy work as well. So, and then they come out with their own economic forecast. So the issue here, right, is the update that they just did was saying in this article is talking about inflation being forecasted in their mind to be later this year as high as 4.2%. And the Fed has been saying we're going to get it to 2.7. So that's the conflict, and hence the title of the way we presented the article today.
Yeah. So what do you think? And Nelson, love your take on this as well.
Yeah, I was on this one when first of all, I'm pretty sure these guys do this for a living. So for me, it's going to be hard to debate at 2.8.
We do it every week, Nelson. We just pretend that we're economists.
Yeah.
And analytics experts.
Exactly. Yeah. But in this case, I mean, I would say, how accurate these guys are, right? Because I can throw numbers left and right. The whole idea is how accurate they are. So I would say I will stay away from the accuracy. For me, it's going to be if I am an owner of, let's say a fastener distributor or HVAC, why this is important to me, right? I mean, how I would be using this, right? So I think Tom, you established kind of the min and max, right, in terms of what I'm shooting for in terms of the inflation. And what I would say is between those two numbers, right, what is what I'm aiming for in price increases, right? Because that's the inflation at the end of the day has to do with everything that we do, live and wages and so forth. And this is my perspective as a Nelson. Those numbers does not reflect what I experience when I go to the grocery store or when I go to a restaurant, right? Because I haven't seen a 4.2 increase, right, across the board of what we buy, right?
Sure.
It's been higher than that. But I would say going back to the business side, I would say I would use those two numbers, and I would say pricing wise, I know that I need to see an increase on my prices somehow, because that's going to be reflected in labor and as well the products that I buy. Yeah.
I would say going with that, right? If this were correct, right, and we've got, what do we have there? 1.5% gap. I mean, that's crazy different in that setting of which one of those is right. Nelson, I'm known here on this show for being a guy that says over and over again, right, 2% inflation that the Fed's trying to get to probably isn't the right number. And the data that they use to get there is so antiquated, and we have live economic data at our fingertips now. Yep. I don't know if you trade cryptocurrency at all, but Tom has been doing it for a long time. I've been doing it for a short period of time, but I could grab my phone at 3 a.m. when I get up to go get a sip of water and look at what's going on Coinbase with those markets. Right. Yeah. And because they're trading 24/7, but we live in a world of instant information. And I just have a belief that what the Fed is looking at right now is maybe dry and rear view mirror statistics. I'd really apply it to something we say all the time at LeadSmart about, the holy grail within distribution companies in particular, but manufacturing companies as well, is ERP data. Well, ERP data is stale, right? ERP data is information about a rear view mirror look at a transaction that happened at a period of time. It's not true insight into a customer. It's a transactional insight into a customer, but it's not seeing everything going on at the customer. When you start looking at all the different journeys with marketing and e-commerce and interpersonal journeys that your customer takes with you, those are the real insights. And we have access to those now. So I look at this and say, we're probably not in the right place, but is 2.5 the good number? Is 2.7 where we're at right now maybe a good number? Those probably are a little more reasonable. The challenge I think that you see here when we start talking about the audience that we're talking about too with wholesale distribution manufacturing is there's already margin compression, right? There's already an issue with inventory carrying costs. There's already a sourcing issue based upon tariffs and so forth that are going on. If this were correct and we start getting into the 3.5 range and so forth, and I think, there's already been, I don't think anybody takes it seriously, but there's already been some serious discussion. I'm going to say serious. There's already been some people throwing out the idea of a interest rate raise later this year. I believe it's going to stay flat, and maybe we'll get if the war is over and oil comes down and we see a few things like this, maybe we'll get one cut this year. But there's some serious impacts that if this 4.2 number, right, you deal with margin in your business every day with wholesale distribution and manufacturing, right? There was a margin compression issue because of other factors, competitive factors and so forth, before we got into a inflationary setting a few years ago.
Yeah, I think you brought a great point, Kevin. And this is something, again, when I was born in a third world country and I have to live with, GE and different businesses in Latin America, and we are used to inflation, right? That's something that we live with. But the U.S. was not that way, right? I remember the U.S. always was kind of stable, right, within a range, and now we're getting to this inflation. So I think the adjustment that owners need to do in order to account for that is big, right? And I think there are two ones that I've seen from my customers. One is about labor, right? Mm-hmm. That's something you wanted to keep your best people, right, with all the stuff. And, they are, having those pressures. That's quite important. And there is a second one that was brought up this week with a customer of mine. They are start receiving fuel surcharges, right?
Sure.
So I know that's a different topic that is below that.
We're going to get there. Yep.
Yeah, I know, but that's a big one, right? Because
Absolutely.
Now you have tariffs and then you have fuel. So when you're talking about, fastener industry, maybe that's not a big problem, but you're talking about HVAC and electrical, right? But they have LTL and all that. That's going to be big. But anyway, I think inflation is a topic. I think, again, from my point of view, it's about pricing discipline. If you don't have one, it's going to be a problem. If you are lax, you need to get better at that. And if you have good price discipline, you are going to thrive in this environment. That's what I'm saying.
Yep. So I have a question for both of you, right? If and anybody that's listening here in the distribution world, right? Let's just say that OECD is talking about then a recessionary issue happening, and the pressure that comes up. Let's just say we ended the year at back in the, let's just say 3.25 range. And GDP doesn't grow at the rate that it was expected to grow this year. There's people talking about GDP growth of, 4, 5, 6% even. I've heard those numbers. What do you do if you're a wholesale distributor from a standpoint, or a manufacturer from a standpoint of budgeting for 2027?
What kind of budgeting, or what budgeting are you talking about?
The entire business budgeting, right? Where's my growth coming from? What am I doing am I going to open a new warehouse the next state over and hire salespeople there? What does my head count look like? Entire business budgeting. What should I be thinking about?
Yeah, that's a great question.
Yeah, I guess I'm struggling a little bit with the question, right? Because
question super straightforward, right? If interest rates stay high, inflation is back in the 3s, we've got high oil prices that we're looking at right now, and my real question was, if this suggestion by this Organization of Economic Cooperation and Development is anywhere close to right, let's say it's not 4.2, but let's say it's back in the 3.25 range, 3.5 range. We've got a risk of interest rates being raised next year. If that were the case, what should I be doing right now as a wholesale distributor or manufacturer to be thinking about my budgeting? Because people are going to start very serious budgeting work in 3 months or so for the following year.
So are you suggesting
what would you do if you were a wholesale distributor?
Yeah, I would lean in.
Okay.
Right. Because and again, maybe you're not asking this, but I don't know that the inflation, or I hate to use that word because it's not really inflation, but the price increase, right, that I believe the OECD is basing their 4.2% as the cost of oil and energy, right? I'm sure they're using oil and energy as the primary catalyst for that change, right? Now that will trickle over, right? That can trickle over into food costs and other costs, right? Because there's costs of energy for delivery and everything else that goes with all of that. So, but energy is the catalyst I believe, for what they're suggesting there. So it doesn't necessarily change. That's why I disagree with the GDP. It doesn't necessarily change the growth that we have in the US, the buildings that we're doing, the expansion that we're doing, all of those things. It may make it more expensive, but it doesn't necessarily change the outlook for what we're actually going to accomplish. Now, maybe you're suggesting, Kevin, that, people's cost of money is too high. We're going to stop, expansion. We're not going to.
I don't know. I'm asking the question, right? You guys both talk to distributors, manufacturers every day. If you were them, what would you be thinking about from that standpoint of, am I going to open new branches next year? Am I going to hire the 27 headcount that I would like to hire? What should I be thinking about?
And I think this is kind of Bob's comment here, right? We're assuming there's going to be something stable. We're assuming we're going to get back to a normal. If it's not the war and it's not this, it's going to be something else, right? So that's my point, is I just lean in, and continue to focus on my favorite topic is how do I get more out of what I'm already doing?
Sure.
How do I get more out of my organic growth and so forth? And because there's plenty of opportunity for that, as we know, that we see every day. But I certainly wouldn't backpedal.
Great. Nelson, if your biggest customer asked you tomorrow and said, hey, give me some thoughts and ideas about all of these factors that are going on in the economy and the world and so forth, what should I be thinking about and doing? What are your thoughts?
Yeah, what I would respond to my customers, I think, is maybe the old school answer of focus on what you can control, right? And what you can control is from whom you are buying and how much you are buying, right? That's important because that goes into your working capital and your margin. The second thing is to whom you are selling to. Are you have the right portfolio of customers that you wanted to sell, right? Through this, crisis or whatever. Definitely what is your discipline about, pricing and your discipline about your cost part, because your OpEx is going to go up no matter what. Right. And if they focus on that one, I will, sit down with the CFO and say, can you tell me how you guys performed the last 2-3 years versus that volatility, right? Can you show me how your company grew, right? And compare that with inflation. I think on this one, Kevin, what I've seen with my customers is that there are pockets of opportunity. Always yes. There are pockets of opportunities. And
I think that's Tom's point too.
Yeah. So I think I have customers, they have the best year last year, right? And some of them, they have the worst, one of the worst years. So just pockets of opportunity, who they are serving on that regards. But again, on the planning side is what you can control and how close and how far you are with that. I will say that if those companies are leveraged, that's a different ballgame, right?
Yeah, great point.
I agree with that. Leverage is a different situation, yes.
Exactly. That's a different ballgame. So that's what I say to my customers. Like, if you guys are leveraging a lot of your growth, right, especially working capital or CapEx, man, I mean, you need to have a good, sound, business plan. And one of my customers last year got in trouble because of that. They really, tried to go too fast with all this stuff and, leverage, and that didn't went quite well. You don't have too much room for mistakes, right? So it just depends on how comfortable you are with risk as well. If you are risk adverse or you want to be more aggressive on that one. Yeah.
You're on mute,
Kevin.
Tom does that to me sometimes. He just wants to have some peace and quiet for a bit, so he's controlling the soundboard back there. No, it was me that time. But I think it speaks to the balance sheet, right? Yep. Is and the value. It's no different than a consumer, right? If you've been saving and you have strong credit, right, then the issues that are going on at the supermarket impact you a little bit less than the individual that's highly leveraged with high credit card balances or whatever it is. Those two things I think correlate very well, right? If you're a distributor or manufacturer with a very strong balance sheet, strong banking relationships, and you don't need to be sitting on a treasure trove of cash, but if you do have a good cash position with a strong balance sheet, there's some really great things you can do in downturns too, right? And to Tom's point, I think is great about leaning in this setting. And I think it makes sense if I'm a wholesale distributor and I maybe have some challenges with my balance sheet right now, is maybe this is the time to sort those things out and then take the Tom's position. And I would fully agree with both of you on everything that you've said is, be structured, be organized, understand where the pockets of growth are and lean in, right? Because
But lean into that organic growth that doesn't going to require you to go borrow $10 million or whatever to open the new warehouse or whatever the case may be, right? Do things that there's plenty of opportunity. I see it every day. I'm sure you see it as well, Nelson. There's plenty of opportunity for optimization and growth, but everything is happening right now without borrowing money or opening a new brand.
Yeah, something I want to mention, I think Bob mentioned about remains, something about stability, and assuming stuff. What I said to all my customers and my prospects, and what I have opportunity to talk with audiences, is like volatility is our new reality. That's all what we know. Yeah. Volatility is our new reality. So I think anyone trying to think about is going to be like the 90s or the 2000 and 2010, I think that's gone. We're in 2026. Is going to be volatility from here to many years to come because we're seeing a huge structurally change in the world, geopolitics and all that thing. So if someone is like, I want it just to be, inflation plus 1 point and remain my business niche, $10 million, making some money. And I mean, you can do that, but it's going to change the world around you, right? And it is what it is, right? It's volatility. So if you can thrive on volatility, I think it's going to be fantastic. If you don't like volatility, that's going to be a rough.
Go get a job.
Exactly. Right? It's going to be a rough.
Right. Or that a job is going to save you from volatility.
No, but if you are running an organization that needs an entrepreneurial mindset, if you're not prepared for the roller coaster, I think, right?
Yeah.
Go back to the merry-go-round. So you'd be right. If you're not ready for this, because I mean we see it in all of our businesses. I think what's unique about this though is both of our companies being technology companies, with Nelson with your company Intuilize and with what we do at LeadSmart with our solutions in an enterprise growth platform is. I'm very confident. I don't know the numbers because we've never talked about it, but I would have to assume when a distributor or manufacturer is working with you, you can very quickly uncover millions of dollars of growth opportunities for them. Yeah. We do it every day, tens of millions oftentimes of growth opportunities that have never been uncovered before in a business. And we live in a world in a day and age where you can use technology to leverage how you're going to grow, right? And to Tom's written a white paper about this, and we talk about it all the time, the organic growth opportunities that are available by just, I have a mantra, right? And Nelson, I don't know if I've shared this with you, but I started my career in 1989 working for a wholesale distributor and then was a manufacturer's rep. And then I've been on the manufacturing side and then the advisory and consulting work before we started LeadSmart. And I've just said it for my whole career is that most salespeople walk by more business than they have when they're in a facility or on a job site, right? Because they either one of two things is happening. This is what, Tom speaks to this eloquently all the time. Oh man, did I just say Tom was eloquent?
Yeah. And it's
Taylor, our editor, take that. Yeah, when he edits this later, we can take that out. But what Tom says so well is about this organic growth is, salespeople tend to sell what they're comfortable with, right?
Yeah.
You reference an HVAC distributor. So maybe an HVAC distributor, hires a guy that was a hot shot at an electrical distributor that also did HVAC because he's going to bring some accounts in. Well, he's going to likely sell mostly electrical in that setting rather than the big focus across the board. But if we can start uncovering low-hanging fruit, right? Now, all of a sudden, the volatility that we've just been talking about is much more balanced in that setting.
Yeah, so, I agree with you.
Hey, let's roll into it because Tom, you mentioned earlier about energy prices and so forth. Let's roll in and talk about the next article that we have here, which is from AP News. Talks about this from earlier in the week. Talked about International Energy Agency head says global economy faces major threat if the war continues much longer. So any takeaways for either one of you on that one?
Yeah, I mean, I think what the point is, right, is even if there was a ceasefire tomorrow, right, it's not like everything, you snap your finger and everything's back to normal.
Yeah.
And there's been infrastructure that has been damaged, not only in Iran, but in other countries around the area and things along those lines. So there's certainly been a consequence potentially of what this is. Again, I don't know the story behind the story, so it's like there's probably more homework to be done there, but I do completely agree that I'm sure there is consequences and ramifications above and beyond just the fact that the Strait of Hormuz is closed at the moment.
Yep. Well, I think this ties right well. As a side note, before I even mention that, Nelson, I don't know if you're old enough, but Tom and I are, and I don't know if you were in the U.S. as a child, but I remember the 1970s when here in California, at least, you could only get gas on certain days of the week because of what, and that was tied to what your license plate letters were or numbers were. Was it? You remember that, Tom? Was it letters or
odds, demons or whatever?
Yeah, something like that, right? So I remember my dad saying, "Okay, today's my day," and needing to go into work late or come out home early or whatever because he had to go get in line, and the cars were lined up to get gas. So I don't know if you might be too young for that, Nelson, but
Oh man, I appreciate you saying that. I'm a little bit just younger. Maybe I was not living in the U.S., but I was able to see the news right on the TV, about that part. What I can tell you from my experience in Latin America, we have a lot of those things, right? When you have rationalization of everything, water, electricity, gasoline, all that one. And I think on this one is that when we think about, gas or oil, I mean, as a consumers, we think about just our cars and that's it, but it's a huge ramification, right? What happens there? I was just reading this morning about, it's not just about, oil and gas, but it's aluminum, right? There are cars that are being not able to deliver because of that. So that's a, geopolitical thing that is happening right now. And I do believe it's a major threat, right, on the supply chain side. And I think Tom alluded to this, which is even if that is being reestablished today, it's going to be a lag, right? That is going to take a couple of weeks or months to reestablish that one across everything, not just the ocean freight, but as well the air flights, right, as well, which is a nightmare today over there. So that's going to affect the supply chain. And again, we're going to feel it a little bit later, but definitely we're going to feel it. Yeah.
Yep. Well, they're talking here about 11 million barrels per day, which is just it more than double of the challenges that were happening in the 70s. So it's a pretty significant deal. So I hope this gets cleared up quickly. But there's obviously
oil usage, though. I mean, think about compared to the 70s,
right?
The oil usage in China and other places and other developing countries is, I can't imagine you can compare apples to apples from that. There, it makes a good headline. It's worse than it was in 1970, but I don't know if that's real compared to the growth of oil and the overall usage of oil compared to then.
So are you saying that it's twice as bad as it could be that there's 3 times more usage, so twice as bad is it not as relevant?
Exactly.
Okay.
Right. It's if you look at compared to the consumption in the world, right?
Mm-hmm.
Compared to what we had in 1970. I mean, look, China was not consuming that much oil in the 70s relative to what they are today, or India or other developing countries, right, along the way. So I don't know that would be an interesting Gemini question for you, Kevin, but I would think it's not apples and oranges, that's for sure.
Yeah. Yep. Yeah. No, I would agree with this setting, but we're going to see this, right? Nelson mentioned freight surcharges and so forth earlier. Those are kicking in. And, this is also one of those moments in time where, and I know none of our listeners would do this in their businesses, but, we see this with oil prices and commodity prices and so many things in general, right? Is we have this urgency from a crisis that prices go way up and they may come down, but they never go back to where they started, right?
Yeah.
And there's always an opportunity that somebody takes to level things up or to get to that next level. So
if you live in Texas and you're paying $2 a gallon for gas, like we saw.
No, last Friday I put some gasoline and I get like a flashback of my days living in California, man. We're paying like $4, $5, or $6 per gallon, which in Texas is just outrageous, right?
Yeah,
it's just
$2.12 when we were in Houston I thought
it was high. I thought it was like $2.90 but anyways, whatever. It's I paid. I haven't bought gas in a week, but even buying gas at Costco a week ago. In fact, I need to get gas today. Is it's $125 to fill my tank, and it was $5.95 at Costco. So,
all right. So on this one, the other thing I wanted to throw out there for the audience, right? Like in every chaos, there is an opportunity, right? So if I am a distributor and I have my own fleet and I'm kind of, debating about, how to deliver to customers, do I do the things the same way that I have been doing it, or I look into different options, right? And today there are, if I'm not wrong, around 4 or 5 different companies that do last mile delivery, right? Mm-hmm. It's like the Uber for wholesalers, right? So I wanted to put it out there, right? It's like either I do it or I be more efficient on working with someone else, right? I just put it out there, right? Because you have a route that is not efficient and you are just burning, gas, and that's assuming you have the discipline to do the math, right? So assuming that, that would be a good opportunity to look into, right? What is better? Do I do it myself, or I have a third party doing it, right? Where I can get, much better return on my investment. So every house, there's an opportunity if you wanted to look into that way.
Yeah, that's great. Makes me think of, what's it called? Curry.com, I think it is that,
Yes.
Right. It works with wholesale distributors and on that last mile, right? That they've got an online resource to find those last mile drivers in that setting. So,
exactly.
We've talked kind of moving ahead here. We've talked a little bit today about obviously all of these different economic impacts. So the next article that we were looking at now, while this article comes from Retail Touch Points and we talk about wholesale on the show, there's obviously tons of crossover when we think about the economic side of things. And I mention this quite regularly, and Tom and I talk about it, is that, the line, Nelson, between our B2C and our B2B experience is getting very gray and will soon, I think, go away. And so just because of the availability of B2B items, specifically through an Amazon business and so forth, mimicking a B2C experience. But we've talked kind of nonstop for the last, year, right? It'll be next week, it'll be a year since Liberation Day and tariffs and so forth. So now with the Supreme Court having said, nope, the IEPA or the Emergency Powers Act for tariffs was unacceptable use of that or so-called illegal use of that. And now we've got the 301 statutes and the other statutes the administration is pursuing. Now we've got a lower court that has said, okay, you've got to go give that money back. Now, I will tell you, this is me falling on my sword a bit here, is I had said a number of times recently on this show that I thought the administration was going to push back on giving that money back. And I heard the president yesterday talk about the fact that, we're going to have to give some of this money back, and it's really unfortunate. And I think he said like stupid decision or something like that of the Supreme Court, but he said some of the money back. Now, I'm assuming he is referring to the fact that not all of those dollars that came in tariffs were collected through the IEPA. So anyways, we have an article here that is about, it's from the former U.S. Attorney for the U.S. Customs and Border Protection, outlined some steps for tariff refunds. The article's entitled Crucial Advice from a Former U.S. Customs Attorney for Getting Those Refunds. You guys get a look at that one?
I did. I think my bet of September is looking good. I'm feeling good about my taco and margaritas that I'm going to be drinking here soon. But
they're going to be wine margaritas at that Mexican place we went to the other day that only had wine.
Right, well, it's fine.
Wine margaritas. What is? Sorry, guys. What is that? I mean, we get from tequila in Mexico, which is pure, and you don't do margaritas. Margaritas were invented in the U.S.
Yes,
and now you're getting wine margaritas. I mean, that's maybe we need to go in a podcast for you guys to share that, because that's new.
There's some wine-based concoction that they use it's for restaurants that don't have a alcohol license.
Oh,
that they still do this. So anyways, Tom and I went to this place. The food was absolutely fantastic. I had octopus tacos the other day, and it's fantastic. And but I was going to order a margarita, and I'm like looking for the bar. And I'm like, oh, no, I'll have a beer. But in my house, Nelson, a margarita is fresh squeezed lime juice with the juice of one orange to sweeten it a little bit, watered down a little bit with tequila. So there's none of that other stuff. But anyways, to digress no further on margaritas, going back to tariffs, because Tom and I tend to wager on.
What they're saying in here, right, is they're already setting up ACH framework for making the payments back, but there's quite a bit of logistics that you have to go through to file for it. If you're too late in filing, then you're going to end up forfeiting, right? So of course they won't give back all of them. A lot of people won't know what to do or whatever the case may be, but it looks like the process is going into place. And this article was kind of, I guess, from an attorney who's in this business, giving everybody kind of the best practice of what they should be doing.
Yep. And there's some crucial steps he talks about filing immediately. There's a 180-day window on this, right?
Oh yeah.
And so we're 14 days, I guess, or so into that. to that 180-day window, and you've got to get that filed on time. And they're saying that as of a couple of weeks ago, only 6% of the supposedly 330 eligible importers have set up the system properly to go get those. Now, what I also read this morning was that there's been some major lawsuits filed against FedEx and UPS for people trying to get back from them what they paid them in that setting, which is interesting, right? Because, and I'm sure the same with DHL, because in many settings for small and mid-sized manufacturers and then some distributors, is they act as the importer on their behalf and take care of all the custom fees and things that go with that. So I'm still of the belief that this is going to be much more of a mess than they're trying to talk about this as being orderly. But if you only have 6% of the companies that are eligible for this, right, that and they've got a 180-day deadline, I think. And maybe that's good news, that let's just say it's only 50% of the people that do it. Then we leave 50% of those tariffs that were collected to help with the deficit and help fund the government. Because the issue is here, Nelson, that Tom and I have talked about a number of times is, okay, what was $190 billion? If we flood $190 billion back into the economy, you've got all kinds of other issues that go with the economy. And so the deficit goes up, right? The limited amount that the deficit has been impacted by that goes back up. But now you've got other economic issues that have happened.
I would say my take on this is maybe simplistic, but I will say that the companies that will be able to take advantage of these ones are the big ones.
Yep.
Amazon, Costco, you name it. All the big ones, they have already lined up all the lawyers, everyone in place to take advantage of this, right? I think that's going to be a no-brainer. If a manufacturer distributor of $10, $20 million is going to get into this one, I don't know, right? But that's my take on that part of the equation.
Yep.
And I think the government is going to make it as painful as possible for people to do it, right? So they don't collect as much, as you said, timelines and formats and, all that thing. So that's one side. The other side is going to be on the distributor side. If they have a good discipline about how to work through the cost, through the pricing and so forth, they're going to be safe to explain to the customer base what's going on,
right? Which
I don't think is the majority. The majority just have a big blended thing in their COGS and so forth. So it's going to be hard. Imagine you have inventory, right? And now you have this widget, right, with 5 different costs from $20 to $15 and $10, right? And you are not have that discipline, you're managing your costs. It's going to be quite a bit of a challenge compared with distributors that they have the discipline and they know what is the inventory they need to bleed out in order to get to the next phase, right? Going back to what I said, it's volatility. It's going to happen. And 3 months from now, a law is going to come and say, you can do this with tariffs. And then 6 months from now, a year from now, it's going to be something different, right? So
what does the T-shirt say that you're wearing underneath that fancy dress shirt? It says the new reality is volatility. How did you phrase that?
Yeah, I think that's pretty much. I think that's a new reality.
I think you should trademark that and make hats and T-shirts.
Oh, I would take it, man. I will do it. I will set it out there. Yeah,
very good. We'll sell them here on the podcast.
We're volatility busters.
Yeah. So before we dive into our manufacturing, distribution, and M&A segment, there is another article because I wanted to reference. I'm jumping a couple ahead. It's from 2 days ago. It's from CFO Dive, and CFODive.com has some great stuff in there. But it talks about CFO uncertainty rises more than any other top concern during the first quarter, which really shares for you that these editors there and reporters are listening to this show, because they're now writing articles about the stuff that we're talking about. And it's kind of funny because this talks about, the increasing uncertainty, right? And it talks about inventory carrying costs. It says inventory carrying costs with the 10-year treasury jumping to 4.32. The cost of financing large inventories is rising, and it's big pressure. And then they talk about margin compression related to tariffs and other things here. They call it the double squeeze that a manufacturer faces. And then everybody's had a labor problem for long before we had there was a labor problem long before we had interest rate issues and inflation issues. So good article here talking about it. It does some nice comparisons about 10-year Treasury notes and inventory costs and so forth that we've been talking about already today. Good.
Okay.
Why don't we roll into our manufacturing and distribution and M&A section of the newsletter here. Again, if you don't get our newsletter that we put out every Friday morning, it's called Around the Horn and Wholesale Distribution and Manufacturing. It goes out to 10,000 plus people now. We'd love to get that out to you. Just pop an email to hello@leadsmarttech.com or jump on to LinkedIn, and clearly you can just see that there. If you look up LeadSmart Technologies, the company that Tom and I work for, and you go to our main page there off to the left, about halfway down, you'll see newsletter, or you can actually just search on LinkedIn for Around the Horn and Wholesale Distribution, and the newsletter's there, and you can actually read it right on LinkedIn as well. So a few good ways to do that. But major announcement this week about a big M&A splash, so to speak. So SRS Distribution, historically big in roofing and building materials, and then some landscaping, and even own a series of companies within the pool equipment business, but big basically in building materials. And were bought, I think it's now 2 years since Home Depot bought them. So big publicly traded company takes over privately owned company with SRS. I've had an opportunity to meet a handful of the executives at SRS, and all really good folks. Well, they went out and bought a family-owned company last week called Mingledorff, which is an affiliated distributors member. We're LeadSmart partnered with AD. Mingledorff's, I've met a handful of their folks there. I don't know if you've done business with them before, Nelson, or not, but just really good folks. But all of a sudden, you've got this family-owned business that's now part of SRS, which is part of HD. Yeah. And big splash. Took a lot of people by surprise.
Yeah, so Nelson, definitely interested in your thought here. I've had some interaction, Kevin, just through things we've doing with these companies. Is this a cultural fit? I mean, SRS is very, very innovative, it seems, from what we've had, the dealings that we've dealt with there and the people that we've talked to, right? How does and I shouldn't necessarily, because I don't know enough, but I would assume probably not quite as innovative as SRS, maybe not as fast moving as SRS. How does that fit culturally when that's kind of their strategy? And it seems like a little bit, I don't know, it just seems a little odd to me, although I can't put my finger on exactly what is the odd part of it.
Yeah, I would say, again, I'm not surprised by this, honestly. I was invited to an event in SRS because they are here in Dallas. So they have a big event last year about innovation, a whole day, and they hosted this, and they invited a lot of distributors from different verticals. I was sitting in a room with a bunch of, CTOs, COOs, people in technology, right? Talking about AI and agentic and, all the good stuff that typically you talk. And I can tell you, I guess, I have been 30 years in the industry. I think I talk with at least 150 distributors, 200, I don't know, a lot of distributors within the US and Canada. And I can tell you the team of SRS is top notch. I mean, I can tell you, they were able to describe to us the whole journey that they have from the technology standpoint, from the culture standpoint. And these guys are maybe between 3 to 5 years ahead of almost anyone, I can tell you, right, on that side. So technology-wise, I would say, I don't know the other company because I never deal with them, but with SRS, I can tell you they are way ahead. So that's on the technology side. I'm saying the whole. The other side is your question, Tom, about the cultural part. Something that really impressed me from SRS is how they are transforming these companies that they buy, right? And if I were to be an HVAC company, and I don't know if you guys go, look into, MDM information and so forth, but they had a really tough 2024, and 2025 was bad for most of the distributors, right? After coming from a huge, 2-3 years of growth, right? And especially it's working capital, right? That's the big thing that they have because they have, thin margins. You have your OPEX and you need to work on thin margins. So I don't know it's going to be a good fit or not good fit. What I can tell you is I think SRS has the resources, and I think they already cracked down the code to take this company to a new level. And I won't be worried about these guys. I will be worried about if I were a HVAC distributor, I would be like, all right, the big guy is coming into town, and these are not a typical PE that is trying to figure out how to run a business. These are hands-on guys that they have doing many, many times, right? And they have culture, they have what I call brainware, and they have money in order to make this happen, right? And it's going to be quite interesting. I think that's something that this specific vertical is needed, to have someone that really check things out, to move it to the next level, for sure.
So do you think that this is kind of maybe a shot, a test maybe to go, hey, we buy an HVAC distributor, we see how we integrate it, and then they're looking at a plumbing distributor or an electrical distributor?
I think that's
some other area?
Yeah. So Tom, I think that's a great point. I don't believe this is at all like a quick tuck in, right? Because Mingledorff is a very large organization. I'm going to guess it might be out there somewhere. I'm going to guess 600-800 million, somewhere in there. And so this wasn't like a tuck in that a traditional PE group would say, hey, we bought SRS, go grab a couple of other smaller roofing guys and tuck them in, right? It's the common PE term. No, I would say what I see in this, in Nelson, I'm interested in your thoughts on this as well. Tom, to your question there is, what I see this is, I wouldn't even look at this as being Home Depot or HD in this setting. This is and I'm going to even go a step further with this, just because it's just popped in my mind. This is going back to the gray area that I talked about between B2B and B2C, right? This is that graying is even going to be gone soon. What you have here is I think Home Depot is larger than Lowe's. Not positive, but I believe that to be the case. But I can see Lowe's going with the same idea. Don't look at them as the retailer of home improvement. Look at them as a PE company, right? That is leveraging their publicly traded balance sheet.
Yeah.
First shot across the bow was SRS, and they're saying, well, wait a minute, we've got SRS that's got a good culture. And from what I know, and Nelson, you've probably spent more time with the SRS people than I have, but they seem to be pretty much hands-off HD is with them, letting them go run and operate and keeping their culture. You start looking at, Tom, we work with, competitors of Mingledorff's and peers of Mingledorff's every day that are our customers. I've had a number of discussions with Mingledorff's about our technology, and they've had some interest in the past. I think we're at this place where we have, and this is just my mindset is, I would just look at HD Supply or Home Depot, I should say, in this setting, not HD Supply, but Home Depot in this setting, is just leveraging their balance sheet as a big PE company that just happens to understand the business better than a traditional. And Nelson, you come from PE, right? I think they're just an orange aproned PE company that has acquired some large companies that says, all right, this is working with what we're doing at SRS and building materials. Let's dive into HVAC and see how that plays out. And the next, to me, I would assume is that if this plays out like I think it will and goes well, is it plumbing or is it electrical next?
Yeah, I would say again, I don't know their playbook because I'm pretty sure that's confidential. But again, trying to use some of the experience on the PE, I'm going back to even the BG days. Mm-hmm. I mean, when you have a culture and you know how to improve businesses, right? You have an operating system. And as you said, you have a balance sheet that you can leverage. I mean, the conversation can go, in different ways. Like, can we try? Exactly. Can we try HVAC? Why not? What are the margins out there? What is the entry barrier that you have? This, and this. And, electrical and HVAC follow a same pattern, which is you are going to make more money. You're going to be more strong the larger that you are. And geography is very important, right? So if you're able to get clusters of, these different distributors going to grow. So again, I don't know if the discussion was, hey, let's try to HVAC, let's throw a couple of millions to see if that works. Maybe it could be that conversation. Maybe the other conversation is we see HVAC, And we have lined up already 5 to 10 deals that we can go after because we know there are other PEs that are going to look for. The big difference that those PEs, they don't know, or maybe they are a little bit rough with the companies that they acquire, and SRS is going to be more a shiny object, right? In that sense, because they will be more attractive to have a culture. Hands-on, I can do this may happen. And also you can see if, they can say to expand further. I will say, I don't know how that plays out. Interesting enough, this week, the holding company that owns Ferguson and the other ones, DSG, they have like 10 to 12% of their stocks floating, and they just bought out the whole thing, right? And they are kind of a similar kind of motor, right? In that sense, being all these big ones. So I think they are going to make a splash. I think they're going to remain in the marketplace. And I think this is going to bring new dynamics to the HVAC big time.
Do you think, Nelson, you have a background in private equity and then all your work in distribution. What are your thoughts on my comment about just looking at whether it's a Home Depot or Lowe's or somebody in that space as just a PE type, acquirer, right? Does that make sense to you, or do you?
It kind of makes sense. I mean, again, I would say that for them, let me put it this way. So when you talk from the PE perspective, you will say, okay, what are the synergies, right? What are the synergies here? So imagine that you are sitting at the board of Home Depot and you say, okay, the first synergy that we have is purchasing power, right? That's the first one. So I'm going to sit down and I'm going to throw some couple of names here, brands, and I wanted to disclose these are just
hypothetical
samples, hypothetical. So I don't get, because I got this sometime in the past with art.
No one listens to this show anyways, Nelson. Don't worry about it. Just us three talking here. Yeah.
I don't want to get a company sued me because I said something. So this is just hypothetical. So imagine that they sit down with 3M, right? Say, 3M, we used to buy these from you from our Home Depot stores. I mean, we buy 100 million from you. We now with SRS, because they are all these, we buy another 50. And with HVAC, which happens to be the distributor from HVAC, right? We wanted to sit down with you and to figure out what you can do for us, right? What do you mean? Yeah, I wanted to figure out because, there are other brands that I wanted to see if, they're more interested, right? So Absolutely. That's the way it goes, right? That's the purchasing power that these guys have, right? Yep. And they will say, let's talk about terms, right? It's not about pricing, but terms. I don't like paying you 30 days. We go with retail, right? 60, 90 days. It doesn't move. I wanted to return it to you, and you're going to take the returns. No, I don't like those terms and conditions. Okay, dude, thank you. I will be talking with someone else. So that's the purchasing power that they have, right? Big time.
Well, and it's interesting. You were just reminding me of a story from I want to say 2004, 2005. I'm not gonna mention the company, much like you were being cautious there, but it was also a conversation with 3M. I will just say, a publicly traded, one of the largest, if not the largest, industrial distributor in North America. I had been, because of the work I was doing with that large distributor, I was involved in a manufacturing company at the time. I knew the national account manager for that distributor that managed their relationship with 3M. Yep. And I remember him being summoned to their company's headquarters to meet one of their most senior executives, to get on their corporate jet to go to Minnesota to meet with 3M, because there was an imbalance of what the companies were spending with each other, right? Yeah. So that distributor wanted more business in the 3M factories than they got, and they wanted to discuss what their spend was with them. So same idea of what you're talking about. There's big leverage that can happen in that setting.
Oh, big time. Yeah.
Yeah. Good.
And again, technology wise, I would say even more, right? But I think, again, for HVAC distributors, you need to start looking into, this distributor. And again, as we do, you, Tom, Kevin, you guys need to go use whatever Gen AI, Claude, Gemini, whatever, and just get an agent and looking into this kind of news, right? If I were a HVAC company, I would be doing that, because this is going to be huge news for them. Again, going back to you, Kevin.
Yep, good. Tom, where do you want to head next?
Well, Is there anything else you want to hit here? I know we're kind of short on time, and we've not very accomplished very much.
Yeah, let's jump on. We can just jump into our follow-up segment there. I think we're going into AI, right? AI and the latest news and updates and tools. You want to do that?
Yeah, I'd actually like to hit this last one here on the M&A one. The Jeff Bezos back.
Yeah, sure.
To buy manufacturers, and I guess this is just in alignment of what
$100 billion fund.
He's trying to raise a $100 billion fund. I'm sure he will succeed. He could put in, if he needs a few $100 billion or a few tens of billions, I'm sure he can come out of it on his own.
Yeah.
If he needs to. Right. But he's going to create a fund, I guess, to buy manufacturers and modernize them, right? With AI. Again, it just goes back to everything. I mean, I guess you would consider even what we just talked about, right, with SRS, right? They are trying to maximize their organic growth strategies by using technology and using innovation. And this is exactly what Jeff Bezos is saying is, okay, there's a lot of opportunity here to innovate and make some significant changes to the manufacturing industry. And we want to buy some of those and transform them, and we would see a large return on that.
Well, I can almost guarantee you next phase is, right, whether it's through his space company or whatever it is, and I think it even talks about this, right? A big part of this is the robotics component of it. And there's now, he potentially just controls the supply chain, right? I'll make the robots and you can lease them through Amazon potentially, right? And I'll be making all of these other components, and there'll be components that are needed for my robots. They'll be needed for my spaceships. They'll be needed for whatever else. And by the way, we'll also sell these things through Amazon. And now he's got a full vertical integration across the board in the setting. Nelson, any takeaways on that one? I'm glad you brought it up, Tom.
Yeah, I would say this one, I saw that, news, and I was thinking about, I just wanted to pick about what you said, Kevin. I think definitely these guys have a playbook, right? In terms of what to do when they buy these kind of companies. I would say a couple of crazy ideas. I don't know how far or how close they are. One thing is, if you are that company and you're buying, let's say, first of all, they wanted to buy companies or manufacturers where you can automate things, right? We know that there are manufacturing companies where it's going to be hard to automate things. So I'm pretty sure that they got that already straight up. The thing is that if they are able to, let's say they pick, tier 2, tier 3 automobile, I'm just making that up, right?
Yep.
And they start, focusing on those ones. The question that I have is maybe they can crack the code to automate, maybe the production of something on 10 of these, companies, and they can lease that. Or they can now start selling the software, or they can start selling the agents, right? And again, we can see in Amazon business right now. They are running these warehouses 24/7. They are killing anyone, right? The cost to serve for them in the Amazon business, right, for orders are, maybe in the $15 to $20. That almost no distributor in the U.S. can get to that, right, for an order. So that's how much they can squeeze from that. So I think definitely is going to come things from this. Manufacturing is a little bit different than e-commerce, right? But I'm pretty sure these guys have plenty of time and money and resources to bring that. I don't know, Tom, any comments on this?
Yeah, no, I agree. I think they'll end up with, he's raising the money now, right? So the fund is not operational, but he's been visiting, I believe it said, Singapore and some other, sovereign wealth funds, and trying to pull together. I don't have much doubt that he'll pull together the 100 million, and then he'll have a really good team to go do this.
Well, if it was 100 million, that's a dinner tab for him.
All right, at 100 billion.
Yeah, could you guys imagine all the data that they are going to recall?
Yeah,
maybe that's going to be what they are going after. You imagine all that information that they have being the manufacturer. Now they get into the distributor, and then they go and back to the raw material and say, well, I can predict, what's going to happen here and here. Can you imagine that bargain power that they can have just with the data, I think that's going to be huge.
Well, I look at this and all I can think of is, in looking at him is built the empire at Amazon. You can never question the impact that his vision has had on the world, right?
Yeah.
I don't know about your house, Nelson, but rarely a day goes by that there's not something showing up at our house because of the convenience factor, right? And my wife gets laundry detergent and things like that delivered now, which is great. Yeah. But I watch the rise, and then I think about this, and we rarely talk about things from a personal standpoint, but he went through a major divorce a number of years ago, then got the hot new wife and is traveling around the world on the yachts and going to the Academy Awards and this event and that event and sitting on the yacht in the Mediterranean. Probably has been watching through all of that Mr. Musk very closely, your neighbor in Texas there, and says, well, wait a minute, it's time for me to jump back in this game and maybe get out of the limelight from the Hollywood component or the jet set component and get back to business. And I may not agree with everything that Elon Musk does, but I would never bet against him. And I think you have to look at him the same with Jeff Bezos in the same fashion. And there are we've talked about a lot of really unique things today, and I'm appreciative of your insights into these things, Nelson, and joining us. And by the way, I will confirm now you have already qualified for a return visit.
Nice, awesome, perfect.
I don't know if that's something to want to achieve, but it'll come.
I will bring the hats and the shirts with the stuff
perfect.
So we can wear it. Yeah,
perfect.
Thank you, guys.
Yeah, but I think we've talked about a lot of things today that should make both a manufacturer and a distributor continue to really take note about the changes that are going on. Yeah. And that's just not about having, and we're going to talk about AI here in a minute, but it's not just about having a board of directors that says, hey, what are we doing about AI? Or a CEO that went to a conference somewhere and said, oh, I heard all about new AI stuff in distribution. It's big picture. This is, what is the world doing? What is changing? What is an HD supplier, a Home Depot through SRS buying a family-owned distributor mean to my future? What does the volatility of the economy mean? What does it mean when Amazon, who for a lot of distributors, there's distributors who embrace the Amazon concept and sell on Amazon and do a phenomenal job with it. And there's other ones that look at it as the devil. And what does that mean when the guy that figured out this Amazon thing says, I'm going to start buying manufacturing companies. I'm already the biggest distributor in the world. And what does that mean? Right now, I think, I don't know, maybe if I were talking with my, my grandfather about this, he could tell me about all of the other changes that have happened in the 40s and 50s that I don't remember. But I think that we're at a pivot point right now, or a tipping point, so to speak, of what could be happening.
Yeah, no, this one, just last comment on this one. And it's just, kind of, going through my brain. So you're at Amazon, right? Do you know, we don't know, how much data do these guys have about manufacturers, right? Because they're on the consumer side. So when you go, they know exactly, right, lead times, on-time delivery, defects, right? They already know styles. They know life cycle.
They know more about most manufacturers than the manufacturers know about them.
That's my point, because they have contact with the consumers. That's what you said, like that great area, right? So again, I'm not saying this happened. Again, I don't want to be sued by this. This is just Nelson thinking out loud, which
That's
is
what we do here.
Okay, perfect. So we are there. I would say, okay, you get a couple of data scientists in Amazon. It's like, guys, can you tell me what would be the top 5, verticals that I wanted to invest in the manufacturing side, given all these different parameters of the last 1 month, 2 months, 10 years, 50, whatever you wanted to have, right? With all the data that they have, I'm saying that they did that. And on that one, how they're going to integrate. This is an integration. This is a vertical integration, right? That you can have.
Mm-hmm. Yep.
On the consumer side, because they don't know margins, but they can calculate margins, right? In terms of the manufacturing side. So that instead of, going and, getting stuff from China or India, whatever, is what we can build in the US or in Canada or in Mexico, right? Through all this Amazon stuff, and we can integrate to the whole thing. So it's changing. Volatility, once again, it's just happening in front of our eyes, right?
That's
what
great.
What is going people to do about it? That's my last comment on that.
That's good. Good. Let's roll into our AI and latest news segment. We'll hit a couple things here real quick, and then we'll talk about a few things, a couple other articles. There was, it had just happened when we did last week's show, but Distribution Strategy Group, our friends Ian and Jonathan over there and some of their writing team put a good article and recap about the Trump administration's AI policy and need for calling for a national standard and faster industry adoption. And I think this is powerful from a standpoint of the fact that the risk, and Nelson, I don't know if you've looked at this closely within your company, but if you were to look at this first pass, if you're a distributor or a manufacturer, big deal, right? Okay, so the administration's calling for a national standard, but the ramifications of not having this are substantial, right? Because I think about it. I'll just use our company for an example, and if this could impact your company, Nelson, you can chime in on this as well. Is the risk of having 20, 30 different state regulations about AI use here's the risk, the potential, right? Tom and I have developed a technology company, and over the last year have been adding AI tools and so forth in the last couple of years. And it is the expanded growth of our company as well as agentic AI and so forth of feeding things to a distributor salesperson or a manufacturer's purchasing person on what they should do today versus having them go try and figure it out by using AI. The risk is that somebody could be let's just say we've used so many times today the HVAC example. You're an HVAC distributor in Kentucky, but you have operations in Ohio and West Virginia as well. Mm-hmm. Well, if Ohio has an AI standard and Kentucky has an AI standard, West Virginia has an AI standard, and maybe Tennessee has one, and you're getting ready to go into those markets, and you've bought software from us, you may not be able to use all of our features that you paid for in one state in another state because that state has different restrictions. And that's been the big push from a Meta, a Google, and all of those other companies behind this is, wait a minute, you want me to be able to comply with what they say in New Mexico about how my software can be used and the protections or whatever it is I have to have. So the depth of what this means, I think, goes so much deeper than the news headline.
Well, it's worse even than that, because I think we touched on this last week or the week before. These state level regulations or guidelines become outdated before you can blink an eye,
mm-hmm.
right?
Right.
So now it's actually worse because the spirit, and I'll give them the benefit of the doubt, the spirit of what they're trying to accomplish, which is safety and control over things, becomes obsoleted before they can even get something out there. Mm-hmm. That's hard to keep up with, right? That's hard to keep up with even at a national level. Mm-hmm. So it's just completely unpractical, right? It doesn't accomplish anything, right? If you look at it, if it accomplishes nothing, but it creates a lot of friction and confusion, that's a lose-lose, right? And so it's a lose-lose situation for those two reasons that we just described. Things are out of date and just trying to abide by the different things that are there. Look, it's going to be hard for it at a national level. Right? Mm-hmm. It's going to be very difficult.
Absolutely.
Right.
Yep.
But
they might need an AI czar.
The only chance that we really have, right, to even remotely come to the level that we're going to do there. It has to get through Congress, I believe. And I'm not sure that's going to be an easy job. Right, because Congress is going to have to say, to the states, no, we're not going to recognize your different laws, and we're going to elevate this to a national level. So I don't know what kind of political ramification is possible there, but it's certainly the right thing to do.
Yep. Good. Tom, let's hit real quick before we jump ahead. There is a good article, an interesting article here from HR Dive about enterprises aren't aligned on AI ROI, and talk about acronyms. I think that's a powerful one in that setting, because that's a big factor, right? I remember when we first started our company and I was newer to the technology world, you said something that I'll never forget is you can, with software, you can do anything you want if you have enough time and money. And the second thing you said was people want to buy outcomes, not software, and outcomes are harder to find. And I think AI is the statement you made has never been more true than when you apply it to what's going on with AI, because you got a bunch of people running around right now. I mean, Silicon Valley is minting new companies that have an AI feature that now they say, well, we should bring that to distribution. Now we have 1 million new distribution experts coming from Silicon Valley, which some of them are very valid. Some of the products are very good, but not necessarily a length and a history in distribution. So you got distributors running around trying to figure out, what do I do? And they start buying these one-off solutions without a clarity in my overall digital plan and what's my budget, what are my guardrails, and what are my outcomes.
Yeah.
So, any thoughts from either of you on that?
I'll do a quick thought is, you're getting a lot of tomatoes and things thrown at AI, and AI doesn't work, and we can't get an ROI. This isn't about AI not working. This is about the people that are attempting to implement and utilize AI not knowing what they're doing. That's the cold hard facts of it.
Right.
AI continues to get better every day. It begins to get its capabilities increase all the time. Now that said, the way that you go about implementing it and incorporating it in your organization and how you go about that becomes more complicated and more difficult potentially. So I'm not suggesting that it's easy, but at the same time, I think there's an article at the end here where some CEOs of Walmart and Coca-Cola and other large
exactly right. Great point.
Are stepping down because they're like, look, I can't keep up with and manage to this AI world.
Yes.
That are here, right? I don't know how to manage to this AI world. I don't know how to properly incorporate this into my organization. That's here. So I think we all have to level up, right? And on this, or we're not going to get that ROI that's there, especially when you get into the enterprise and into the business side of things.
Well, I think, Tom, you made a great point. So we have an article in there from Inc.com, Inc. magazine. AI is making CEOs step down too. And that's in our great reads and listens segment. Yeah, so you mentioned that CEO of Coca-Cola, CEO of Walmart basically said, I'm not the guy. Right.
What got us here won't get us there.
That's exactly right. And then they talk about, too, in the same article, about the board at Adobe is super, the pressure and the stepping down of Adobe's CEO was tied to the lack of speed of AI adoption, right? So interesting timing with that. So let's kind of roll, though, into our next section, and we'll just hit a couple of more things for the day. We've got our technology, robotics, and cybersecurity segment. Tom, why don't you lead us on that one? You had an opportunity to be interviewed last week while you were in New York with some interesting points. Why don't you share that with us and your journey there?
I recommend watching the video. It's about 10 minutes long. This first video here, I was at Salesforce's headquarters in New York. They interviewed us because as a partner, they feel like we're doing some pretty innovative things, and they wanted to spotlight some of those things and talk about it. So anyway, it's about a 10-minute video. I thought a really well put together set of questions from them on things on what we're doing, how we're leveraging, why we're even leveraging. Our software is built on the Salesforce sales, the cloud platform. Why did we do that? Why are we leveraging their AI technology? We did another one yesterday that will be coming out soon where we actually did some demos of some of the things we're doing as well. So anyway, it was very great to get that recognition from them, and They're really, trying to spotlight the types of things we're doing and the things we're doing in this industry. They're very interested in this industry. They're very intrigued about what's going on here. So we cover quite a bit of that here in this interview.
So I have a little prompt that I use to help me with the show, and it gives me some sound bites. And so I'll tell you the sound bites it gave me from this. Okay. It says the 5-second brief. This is what part of your discussion with the gentleman from the leadership team at Salesforce that was interviewing you. And again, to reiterate what you said, Nelson, I think you know this, but when you develop technology, you need to pick a development language, a platform that you're going to host things on, and so forth. We partnered when we developed our company with the folks at Salesforce, and they're the most advanced, secure cloud solution possible for a wholesale distributor to work with if they want to use anything related to CRM, sales enablement, and those types of tools. So our technology at LeadSmart, our enterprise growth platform and our channel cloud product are built on their development platform. We use their security layer in their cloud, which gives a wholesale distributor or manufacturer the best of both worlds, right? Because they get our industry specific focus in my 35 years in distribution and our team's understanding of distribution. It's funny, our lead software developer who's never worked in distribution for himself, but he grew up in a household where his dad runs a branch for an electrical distributor.
That's great.
Our marketing lead was formerly a VP of marketing at a large multi-state distributor. And so our teams know distribution. So that's why we chose to do what we did in our setting, because distributor and manufacturer gets the best of both worlds, as I mentioned. So the 5-second brief said AI can generate a complete account plan or meeting brief in 5 seconds, replacing hours of manual digging. That was one of Tom's comments in the video. The plumbing trap, building infrastructure yourself can cost millions of dollars and lots of times without ever bringing a single feature to market, which is why we partnered with them in the platform. And then there's a big issue, right? As we start looking at AI within our business, we've been seeing this, Nelson. I don't know if you're seeing this out there, but we've been seeing pretty consistently. We're talking with, and this is mostly with distributors that are wanting to go get data lakes because they heard of the conference about a data lake. Mm-hmm. And then they just start throwing stuff into the data lake because people say, well, this is where all your data should be. Well, the risk is that you have all this in a database, in a data lake. You buy some AI tools that can access to it. And next thing you know is that, Joe, the junior inside account manager, has HR access to the CEO stock plan.
Yeah.
Right? Because there's no guardrails. There's nothing put in place. There was no plan. We just started dumping stuff in there. So Tom speaks to that quite a bit in this. So I thought it was a really good video. Did you get a chance to watch it, Nelson?
I haven't, but I will look into that one. Yeah, I think that's fascinating what you guys are doing, and again, in terms of the security and everything within it. And I will say to you, you just said if we have that experience. I just have experience with a new customer that signed with us. Mm-hmm. Same thing, 90 million distributor. They have a data lake with all that stuff. Can you show that to me? And they show it to me, and they just have like 5 dashboards.
Yeah. Congratulations.
And I asked them who uses, right? And they have, management, executive. Okay. So again, that's the thing. I think on any technology side is, and that's my own, and I know you are running out of time here, but that's my comment. It's not about AI. It's not about the ERP. It's not about the CRM. It's not about the technologies. What the distributors wanted to solve and what success looked like? That's the question that they need to ask. Because when people is like, Nelson, I have customers, I need to learn about, AI, and I wanted to have, agents. Why? Why do you want to have that? Can you describe to me what is the business case that you have?
Bravo.
You look into the ROI. You tell me what is the problem that you wanted to resolve. Like, this is people looking into the next shiny thing and trying to figure out a problem for it. I mean, let's go the opposite. Say, what are your top 5 problems? And let's see what exactly you need to have. Maybe an automation doing in Python is going to be enough for them. You don't need to have the other things, right? Anyway, so that's
we literally sat in Tom's office the other day talking about this exact comment. Is sometimes it could just be an automation or a workflow that gets you a far better outcome than needing AI for something. Now, AI does amazing things It's not going to go away. It's the future. We've bet our company on it, like many others have as well. But there are amazing things that can be done much more simplistically than needing AI, that sometimes maybe feel like AI. But I think now we're in that hype phase. So before we go away, there's one article that I did. We don't need to spend time on it, but I just was intrigued by it. We have another section in our newsletter about people in leadership. And there was a really intriguing article in there from Axios from earlier in the week. And it talks about growth slows across the U.S. counties as immigration plummets. And it really is an interesting thing here, talking about the divergence between migration policy and the kind of natural change, which is, they say, births minus deaths. But it talks about a shrinking labor pool. And we've talked at length already today, and it's one of the biggest issues that the distribution struggles with in that setting, is that they have a labor problem and a hiring shortage already. And now with the borders being closed, it's not just necessarily, I don't want to say it's not just illegal immigration, but there's a compression now on hiring in that setting. So I don't know if you guys caught that article.
Yeah. I mean, there's a fewer people in the pool, right?
Yep.
So.
Yep. So good. Anyways, let's wind it down for the day. Nelson, thanks for being with us. Sure appreciate your insight.
Great insight
today.
Yep.
So we'll get you back. Hopefully we cross paths in an event. Will you be at NAW Shift, or do you know if you'll be there yet?
Yeah, I mean, I'm planning to start traveling in June if we have enough TSA people in the airports. If not, I'm staying home, man. Okay?
I think they said they signed they're getting funding. The Senate approved it last night or late last night.
Okay.
So I believe that the airport problem is going to come to an end.
Good.
Yeah.
Good. Well, Nelson, we'll wish you a wonderful weekend. We'll look forward to seeing you in person sometime soon in our travels over the course of the year. Lots of events coming up.
Yeah.
Either of you guys have anything exciting this weekend going on?
Not too much.
Good.
I need to fix my backyard, so that's going to be my dirt therapy. That's what I do. Dirt therapy. Yes,
that is why we'll use that phrase, because my wife feels the same way in dealing with her garden in our yard. So that's great. Well, listen, thanks again, gentlemen, for being with us. Again, I'm Kevin Brown. I'm here with my good friend Nelson Valderrama and Tom Burton. Tom and I get together every week with exciting and innovative guests and insightful guests like Nelson, that bring the thoughts of the week as we bring what happened in the news together with how that impacts wholesale distribution and manufacturing. Again, we publish a newsletter every week. It's called Around the Horn in Wholesale Distribution and Manufacturing. And if you don't get that, we'd love to send it to you. Just pop us a note at hello@leadsmarttech.com and we'll get that out to you. We always try and end our show with one request. Nelson, I'll ask you to do the same. If you enjoy what you hear, if you appreciate the show, share the newsletter with friends in the industry that might benefit from it. But the big help that could be for us is if you are on Apple Podcasts, listening in, Spotify, YouTube, hit the subscribe button and ideally leave a review. And that gets this out to more people. There's millions and millions of people employed around the world. We usually have minimum of 5 to 7 countries that we have downloads in each week, or people even with us on the live show. And we appreciate you being with us. But there's a small group of people that come and listen in versus the people that this could benefit. So if you can, hit the subscribe button, leave a review, and we would greatly appreciate that. So on that note, gentlemen, thank you again for a great day. I wish everybody a wonderful weekend. Be kind, be safe, and do good things.
Yeah. Thank you, guys. Have a great weekend.
We hope you enjoyed today's episode and our guests. Each week, we try our best to dig into the topics that are impacting your business. So please reach out to us and let us know how you think we can make the show better, or topics you'd like for us to tackle or talk about more often, and even guests you'd like to see join us. We're looking forward to bringing you next week's session and hope that until then, you stay safe, stay focused, and do great things. If you haven't already, please subscribe to the podcast and leave a review to help others in wholesale distribution get access to the conversation. And finally, please check out our sponsor, LeadSmart Technologies, and their manufacturing and wholesale distribution industry CRM, customer intelligence, and channel collaboration platform. That's LeadSmart Technologies at leadsmarttech.com.